So today we are going to look at property investment analysis for realtors. So you're turning agents into advisors. You remember I have told you before, you are not an agent, you are not a realtor, you are what? A consultant. So, and if you are a consultant, how do you analyze properties for that you recommend for clients? Even if it's our own property, the client is asking you some questions. How do you talk as a consultant? How do you analyze the property? Or somebody came to you and say you want to buy a property, it's not what we have. You want to look for property for the person another place. What are the things you look out for? So training objectives. By the end of this training, you'll be able to understand investment property, develop investor mindset, analyze property like a professional, advise clients with confidence, close higher value deals, and build lasting trust with clients. This is what we want to achieve in today's training. So before we proceed, we need to understand first what is investment property. So an investment property in real estate, such as house, apartment, commercial property, or land, purchased with the primary goal of generating financial return rather than for personal use. Investors earn money through rental income, long-term capital appreciation, or short-term flipping after renovation. Let's say you bought a house, you renovate it, you want to sell it. So do we understand what investment property is? The sole main purpose of somebody buying the property is for the person to make what? Money out of it. That's the short and simple. The person is not buying the house to live there. And many people, especially in our own properties that we have now, many people that are coming to us, they are coming from the point of view of investment. They want to build wealth. They want to increase their wealth by investing in property. So it's completely different if somebody is buying a house for personal use. So for you to, properly analyze investment property, you need to have what I call mindset shift. Do you understand me? So, for example, agents focus on 3-bedroom flat, tiles, marble, the room is spacious, but advisors focus on what? Return on investment, rental income, appreciation. These are what investors are after. As we said, the person is not coming to live in that place. Do you understand me? So what interests them is what? Numbers. And even when you are telling them a return on investment, don't just say high return on investment. Percentage, yes. That is what interests investors. Not you tell him this has higher ROI. What is higher ROI for the person? Do you understand me? The investors are interested in what? Figures. If you put marble or you put a swimming pool on top of the roof, what the person is interested is return on investment. I am buying this house for 200 million. How much will I be getting yearly? That is what? Rental yield. Or I'm buying this house 200 million. I want to sell it in the next 2 years or 3 years. How much will I be able to sell it? Do you understand? So please stop saying high return on investment. Work with what? Figures. This property can give you 50% in the next 2 years. You understand? That means if you bought the house for example 100 million, in the next 2 years you'll be able to sell it for 150 million. Do you understand? Okay. So investors don't buy property. They buy cash flow plus what? Future value. That is what interests any investor, like including myself. I don't know of you. Do you understand? So if you are focusing more on if somebody is looking for maybe where he's going to live, all those things will be a priority. The size of room, how spacious, how beautiful. But for investors, it's figures. That's what they are interested in. So what are the types of investment property? Land banking, rental properties, short-let A, B, and B, misuse, and commercial properties. You know, under commercial, we have so many. Hotel is a commercial property. Warehouse is a commercial property. Event centers, there are so many, commercial properties. Do you understand? So these properties are bought with the sole aim of what? Making money out of it. Do you understand? The person is interested, he wants to increase his or her wealth. So what are the 5 key investment metrics? Return on investment, we have been discussing that. Cash flow, rental yield, appreciation, and payback period. Do we know what all these things are? Okay, go to the next slide, we will see. Okay, if you take for example on this graph, you bought the property for 20 million. That is the investment amount. Are you seeing it? And you sold for 30 million. So what's the return on investment in percentage? It's 50%. You understand? It's simply 10 million divided by 20, multiplied by 100, it gives you 50%. So this is what I said at the beginning. Work with numbers. Do you understand? If you tell somebody high ROI, the person may not understand you. So next time you are presenting a property to a client, try to work with figures. Do you understand? And to protect yourself, you can say about this, because these things also depend on what? There are so many factors that determine how property appreciates and what it will be in future. Do you understand? There are some factors that are not within your control. I'll give you an example. If somebody bought land, for example, and is developing the property to sell, you have advised the person that it will cost like maybe 50 million to develop the property. Can you see that what is happening in the last few weeks have changed everything? Eh? Because transport is something else now. I'm telling you, we are finding it, as a company, we are finding it difficult to diesel our equipment, because they brought invoice for diesel. 1 liter of diesel as at last week, 2,150 naira. So that will change everything. So why we advise you work on figures, put about and give what? A range. You can say 50 to 60%, 40 to 30%. But please do your homework. Don't just go to figure arbitrarily. Do you understand? Okay. So next one is rental yield. So this person bought a property for 25 million and they're renting it out for 3 million. So what's the rental yield? 12%. Let's not waste time. Simply 3 million of over 25 million to give you 12 point something. So please, these are what investors want to hear. Do you understand? And every other person, I think if you as a person that is working on that, you are investing, this is what you want to know. And you may be thinking that these things are very simple. Many of the people you are talking to, they don't know how to calculate this. So try to master what? First of all, return on investment, yield. Remember that yield, rental yield, is different from return on investment. Return on investment means I bought and I'm selling. Rental yield means I buy and I am renting it out. Okay. Then the next one is cash flow. What is cash flow? Income minus expenses. So where does income come from? Rent. Expenses, maintenance, security, management. Many people, when they want to invest, they forget this. They forget this. They will just say, I will buy this and I will rent out for this. Please advise them. Tell them that they have what? Management fee. This place, we're all seeing it. Abi? Like this environment, there is security here, there's water, you have to cleaning, Abuja environmental, they will come to pack refuse. You pay for all those things. So there are expenses. If you are renting out a house, have it in mind that there will be some expenses. The whole money won't just come to the person. Do you understand? Okay. Positive cash flow means what? Smart investment. So if somebody have a business and you are not getting positive cash flow, you are not smart. That's simply what it means. And do you agree that this kind of thing can happen? Eh? There are places you go and buy house, especially you go and buy house. Maybe somebody told you, those who are looking for cheap property, if you tell them to come and buy premium property from the market, they say the price is high. They want to go to one Lumbu and buy a property. They buy it, they cannot rent it out. Maybe the place is a dungeon, criminals, the road is not good. So it will turn to what? Negative cash flow. Okay, next slide. So how do you analyze location for investment property? What are the things that you look out for if you are buying property for investment? You check what? Access road, population growth, infrastructure, government plans. Do you understand? These are the things that you need to look. Then for some, okay, access road is part of transport, is part of means of transport, is road itself, but some people will consider what? Transport hub, just like our property in Tagini. So these are the things you need to look at the location. If somebody say, I want to increase my wealth in the next 5 years, advise me on where you think I should buy property. It may not be necessarily where the mark have property, but these are the things you are going to do what? To consider. Next slide. Okay, so demand versus supply. If you are recommending property for somebody, you need to consider these things. You understand? What is the demand versus supply in this particular area? You need to ask yourself, who will rent or buy the property? It's not just that you tell somebody, buy this property, in the next 2 years, you will sell it for 50, you buy 25, you sell for 50 million. You need to ask who will rent or buy. Is demand higher than supply? Because if demand is not higher than supply, the time the person want to sell and exit, it will be difficult. Do you agree with me? Okay, how long will it take to recover the investment? That is payback period. High demand drivers. That's properties that are near school. It could be university or, there are some private primary schools, that primary and secondary, that are really very, very premium. You understand? Children of high net worth individuals attend school. That's those places. If you have a property there, one of the things they would consider is taking their children to school. It could be one of the things that can make them buy property from you. It's a very strong demand driver, school. Do you understand me? Okay. Then other things you need to consider. Growing residential hub. Is the place growing or is stagnant? So high demand areas equals to what? Faster ROI. Next slide. So appreciation potential, factors that increase property value. I've discussed this a bit. One is what? Infrastructure development, urban expansion, commercial growth, government policies. So smart investors buy before development peaks. So please, you should be able, as I say, you should be able to advise clients properly. There are people you tell, like this Kuje we discussed now. There are people you tell, say, come and buy property in Kuje. I'm giving an example. Or even at Kagini, some people say the place is far. Abi? But 5 years time, or even 2 years, 3 years time, they will not be able to what? To afford it. If you are buying property for investment, you go where development is going. Development have not done what? Reached there fully. You understand? So that you'll be able to do what? Buy cheap and sell higher. if you go where development is fully, like if you go to Guzapemen now, you cannot tell many people, how many people can afford it? Do you understand? But myself, those properties that they are now saying one plot of land, 350 million, 400 million, I knew when they were selling them 60 million. Do you understand me? So smart investors, they buy before development peaks. But you need to be what? Very, very strategic and know where development is going. That's why they also mention government policies. What is government is looking onto? The present minister is trying to open up all the area council to create more access road to make sure that to reduce the pressure in the main city. Do you understand? That's why they are opening up, because at the end of the day, one of the major drivers of development is what? Road. Do you understand? If there is a good road, people will come. Because normally, if you look at all these places that they are saying is far and all that, some of them is because there is no good road. If you have good road, for example, even from Nyanya to here, how many minutes? If it is not the hold up, the day the road is free, you know what? Eh? No, it's not up to 30 minutes. It's not up to. So road is what? Is the major, and government policy. Where is the policy direction of the government? What do they want to do? Do you understand me? It's one of the things that you need to consider. Next slide. So risk analysis. Every investment has what? Risk. No matter how good it is. Even if you go to Maitama today, you want to buy property, it have what? Risk. And what are the risks involved? Title issues, poor location, overpricing is also a risk, low demand, economic risk. Your job is to reduce the risk for your clients. Do you understand? Please don't just focus on some people. So how to present to clients? Stop saying this property is beautiful. Instead, start saying this property can generate X naira annually and grow by X% the same annually. Do we understand this? Work out the percentage of what the person will get and appreciation. I hope we know what appreciation know by now. We have discussed it over and over again. If the person buy a property, let's say somebody buy suit in our place for what we are selling now, maybe 65 million. What will it be in the next 5 years? Do you understand? So in that case, the person will be getting rent and the property is also appreciating. Work out the figures, use figures. Okay, present in this structure. First of all, you mention the price, income potential, return on investment, and exit strategy. Okay, next slide. So please start closing like an advisor. Lead with diagnosis. Example, what is your investment goal and timeline? These are what questions you need to ask somebody who is approaching you to buy property for investment. You see, I have even discussed this briefly. Timeline, when do you want to exit? Because don't forget that sometimes people invest with all the money they have. I think I shared this experience before. So in our present project in Kagimi, there was somebody who invested just few months after the investment, the person want to, exit. That wasn't the plan. Some other things built up to it. So some people invest with all the money they have. For some, they will use their house rent. Maybe they renew their house now and they expect that in the next 1 year they are supposed to renew the rent, but they want to use that money to invest first for the next 1 year. So when the rent is due next year and they want to sell and you cannot sell immediately, it will become a problem. So it is important that you understand the person's timeline. Do you understand? So that the person won't turn back and say you did not advise me properly. Eh? Timing is what? Very, very important in investment property. If you are buying home, okay, you live in your home. But if it is investment, understand what the person wants. When you are talking about this, you also ask the person the location. So many questions you need to ask the person so that you know what is in the person's mind. Do you understand? Please, these things are very important so that the person don't later turn back and say you did not advise me properly. Eh? Because always remember, in as much as people can build wealth uh, through real estate is illiquid. We have discussed this before. What it means is it's not something that you want cash today, you get it out of it. It will take time. Hmm? As just like the discussion we had now, it's over a year we are discussing with NNPC Property Limited. We have not closed, but we are making. So if we say we want to sell to them and get money immediately, it's not possible. Eh? So please, timing is what? Very, very important. Okay, so this is not just a property, it is an investment generating income. Use numbers to close deal faster. Example, before I recommend anything, I want to understand what outcome you are trying to achieve. Is a question you must ask the person. Please, as I always say, we are here as a business concern to make money, but we want our clients, we want to understand them. We want to position ourselves to meet their goals. If what they are looking for is not what we have, we can recommend other properties for them. Do you understand me? Because people have a goal, they have something they want to achieve with their investment. Don't talk people into something that you know it is not going to work out. Do you understand me? If somebody come and tell us now, say, I want to buy house in a Kagini, and in 6 months' time, I want to move my family there, we will not be able to do that. It's better we tell the person the truth. So if we miss the deal, or the people who can wait for our time, they will come. So please, before you recommend anything, I want to understand what outcome you are expecting to achieve. Use this to protect yourself. Remember, it's a long-term relationship. If you didn't make proper inquiry and you recommend something for the client, when the person will be telling people, he or she will not tell people how everything happened. He will just say you did not advise him or her properly. So it's important to ask questions. So from today, begin to, analyze property like what? A professional. As I said before, it must not be our own property. If what we have does not suit the person's goal, we can make recommendation. We can advise the person. Do you understand? That person somebody you gave that kind of advice, how do you think the person will regard you? Maybe the person came to you and explained what he or she wants. You tell him, okay, this idea is fine, but the property we have now will not be able to meet this goal. Be bold to say that. That person will regard you as somebody who knows what he or she is doing. Do you understand? But if the person come and talk to you, you begin to say, even swear and tell lies to make the person buy from you, when you clearly understand that what you have will not meet his or her goal, it doesn't make sense. Please. Okay. So call to action. Start analyzing every property. Speak in numbers, not emotion. Position yourself as are we experts now? Eh? Okay. Expert is a journey, it's not a destination. So this is where we draw the curtain of today's training. If you have questions, comments.
Mark Homes Limited are leading real estate developers based in Abuja, Nigeria. We currently have ongoing development projects with high return on investment. Please visit our website, our social media handle, or contact us on the number displayed on the screen. Thank you for watching this video. We believe you have been positively impacted. Please subscribe, like, and share.